Well, I don't know about that, but if anybody tells you that you cannot get a large personal loan because you have bad credit, tell them I said they are wrong. In today's conversation, I want to do a compare and contrast between Best Egg, Lending Club, Payoff, and Prosper, and I want to show you how you can get a large personal loans for a bad credit on each of those platforms. Don't go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as splendid as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, we are going to speak about humongous personal loans for poor credit. If you have a FICO below 590 or 600, then you will be interested. Even if you have a higher FICO, it might be interesting for you to hear about this conversation because you might actually get a better loan at better rates. You never know, right? So before I get into the actual comparison here, please understand that when you are thinking about applying online, because all those four players, there are online lenders, you have to understand that there is no risk, really. There's no risk because you have a pre-qualification process. In other words, you are getting just a hard pull. You're not getting a soft, you're getting a soft pull. You're not getting a hard pull here. So they will pre-qualify you based on the fundamental, the basic information you give them, right? So that's pretty cool. So no risks there. And you also have so once you receive the offers and you're comfortable moving forward, you can compare and contrast the rates and the loan terms from different lenders. And you can choose it. But once you choose that, that's where the hard pull happens. They will check your credit score and the score might get a dent, but that's fine. But I always say, before you apply for any kind of loan, I don't care whether you have bad credit, poor credit, excellent credit, or whatever, please check your credit score. You want to make sure the score is as accurate as anything else that should be on your credit score. In other words, if there are some derogatory items, aka collections, charge-offs, repos, all that kind of stuff, nasty stuff, you want to remove the blemish if possible. You want to send dispute letters, or you want to hire, you can do it yourself, or you can hire people to do it for you. Okay, and you can do this very easily. There is a website called annualcreditreports.com, and Congress has mandated that this once a year, every citizen have a free access to their credit reports, and you can see your credit report from Equifax, Experian, and TransUnion for free once a year. Also, think about how much you need. Very important before you even start looking for a loan. Okay. Before we get into the actual nitty-gritty, please check out the short video. It tells you about our approach when it comes to evaluating loans on this show. All right, let's get into the first lender in today's conversation. We have Prosper. I love that name. They have a wonderful name, but are they up for it? Now, so when we think about Prosper, you need to think about a few things. The loan amounts will oscillate between $2,000 and $40,000. This is pretty good. I mean, 40 grand is good. I'll take that any day. The APR there is kind of cool too. You're looking at 8% to 36%. Circa, and the FICO, the minimum FICO is 585, still okay. And their funding is a little slow, so they will actually fund you within 72 hours, 3 days, which is not a problem, which is not a biggie if you think about it. Like, it really depends on how fast you want the cash, but if you are okay to be patient a few days, that's pretty good. And the loan terms will oscillate between 2 and 5 years, so 24 months and 60 months. What are the pros and cons here? We love the user friendliness on Prosper. It is fantastic. Prosper, you're doing a great job. You want to keep doing that. So you have a good online experience. The fact that they have a low FICO makes it accessible for many borrowers, and there are no prepayment penalties. However, and that's not the drawback here, they do have an origination fee. Okay, so this is something you have to think about, and it is actually a peer-to-peer lending platform, right? So basically, you have a constellation of lenders who are funding the loans from individual investors to institutional investors. And when we speak about the origination fee on Prosper, that fee ranges from 2.41% to 5%. So, and this is not negotiable. Okay, it is not negotiable. So this is something that we only see on Prosper. So as long as you're cool with that, then go ahead and do it. So to apply for a loan on Prosper, very simple. Everything happens online. You need to have of course, you need to be at least 18 years of age. You got to have a job. They don't want bankruptcies filed within the last 12 months. And they want to have fewer than 5 credit bureau inquiries within the last 6 months, and they want to have minimum of 3 open trades reported on your credit report. Okay, and your stated income should be greater than 0, which makes sense, and your DTI should be no more than 50%. DTI stands for debt to income ratio. In terms of customer service, great. Nothing to say there. Prosper has a great customer service. Fantastic. I want to talk to you now about Payoff. So, Payoff is another cool platform you can actually peruse if you need a loan. And one thing that is very interesting for us when we analyze Payoff is that it is great for a cheap debt consolidation. So, if you're looking to consolidate existing debt and you want to do this at dirt cheap rates, Payoff should be on top of your list. Why? They have actually mastered the art of aggregating loans and offering rates that are, I would say, accessible to many borrowers. The loan amounts will range from $5,000 to $40K. Not really a big amount like what you have on SoFi. SoFi, they offer like what, $100,000, but it is still okay. I mean, I'll take 40 grand every day if I'm having if cash is tight, if I'm just like going through some hard problems, I'll take 40 grand any day. So the minimum FICO on Payoff is 530. Okay, 530, that's pretty good. Funding happens within 72 hours. The loan terms are analogous to what you have on Prosper. So again, here we have 2 to 5 years. And the pros and cons, we love on Payoff. We love the bevy of financial tools they have. Really, I mean, they are constantly innovating. That platform, they are kicking butt. They're kicking ass. Really. And they have a bevy, a constellation of financial tools. They do have fewer fees. That we love that also. And in terms of their drawbacks, their funding is a little slower. Again, as I told you, 72 hours. On SoFi, you get it within 96 hours. But on other platforms, you can get it within 12 hours. Okay, you have Upstart, Upgrade within 12 hours, within 24 hours. And they do charge an origination fee, and you do have a limited loan usage on Payoff. One thing I want to say here is that they do charge a one-time upfront origination fee of up to 5%, and this is taken out of your loan proceeds. So this is, for some people, it could be felt really hard. Really, okay. In terms of other conditions, there are requirements to apply. Everything happens online, so it is a two-step affair, right? A two-step affair. So the first step is you have the soft pull. You pre-qualify, and then they will send you offers. And if you agree with the offer and you pick one, then they'll go to the second step where the hard pull occurs. Okay, you gotta have a minimum credit score of 530, as I said. And your DTI, your debt to income ratio, should be less than 50%, at least 3 years of good to fair credit history in some cases, in some states, because as you know, lending is state affair. You got to have at least 2 open lines of credit on which you've made one on-time payment, and no current delinquencies, and no delinquencies greater than 90 days within the last 12 months. I'll be right back, but after this, don't go anywhere. Welcome back, folks, to another section of the Awesome Studio QA show. We are still having a conversation. I'm doing a comparative analysis between four players, four lenders. So we have what? We have Prosper, we have Payoff, we have Best Egg, and we have Lending Club. So I have already covered Prosper and Payoff. I want to talk to you now about Best Egg. So when you think about Best Egg, I want you to think about two things. I want you to think about loan amounts that range from $2,000 to $50,000. That's the first part. And the second part is that this platform is fantastic for discounted terms and low APRs. So if you're out there, you're looking for low APRs, you might want to give Best Egg a chance, right? So the APR will range from 5.99% to 29.99%. Minimum FICO 525. And the funding occurs within 24 hours. Think about that, right? Earlier, I was just talking to you about Payoff and Prosper, where funding occurred within 72 hours. In here, we are comfortable enough to say, it happens within a day. Okay, so if I'm in a hurry to get my cash, then it's pretty good to go to Best Egg. The loan term will oscillate between 3 and 5 years. Okay, so you can't borrow for less than 2 years or less than 3 years rather. What are the pros and cons here? Pros, I already said it. You have a quick approval and funding process. It is accessible to most borrowers, right? I mean, at 525, this is pretty good. And the con, they do have an origination fee that some people might not like, but it really depends. So and this is good. So to qualify for a loan on Best Egg, again, the process is analogous to what you have on Payoff and Prosper. It is a two-step process. First, you pre-qualify. There is a soft pull, and then you, if you love the quote that you get, then you go ahead with the process, and they do a hard pull. And so there are basic information you have to enter to see the kind of pre-qualification offers you can receive, from loan amount to gross annual income to your annual household income to your home type to the kind of debt information you have, and the personal information as diverse as address, phone number, and social. Okay, and the quote you receive ultimately on the platform depends on things like credit score and history, your income, your debt obligations, the loan amounts itself, and the repayment terms. Okay, this is something you need to be aware of. And in terms of customer service, fantastic. They do have excellent customer service. They do have a 1-800 number you can call, and they work normal business hours. On the weekend, they even have a limited availability. On Saturday, for example, they're available from 9 a.m. to 1 p.m., but it's still okay. I mean, it's okay. They are available online. They have a large constellation of resources on their website. And so overall, customer service is great. Their mobile experience is fantastic. The site is user-friendly. Fantastic. Let me talk to you now about Lending Club. So Lending Club is the fourth on this on today's review, but not the least. This is a great platform also, and we love the fact that if you think about Lending Club, they've been around for a while. I mean, this is a player that has some experience. They have a proven track record, and at least based on our analysis. And if you want to borrow anywhere from $1,000 to $40,000, you want to contact the Lending Club, and their APR oscillates between 7.99% and 35.99%. And the thing with Lending Club is you got to have autopay. If you don't have autopay means you just have to link your when you apply, you have to link your loan to your checking account so that the amounts are paid automatically. If you do that, you do receive offers. You do have discount offers from Lending Club. I mean, other lenders offer the same discount, but I just want to talk about it in relation to Lending Club. And the minimum FICO here is 540. Your funding will occur within 72 hours, which is a far cry from the 24 hours that you receive with Best Egg. But again, every lender has their own his or her own, I would say, processes in place. So the funding 72 hours and the loan term 3 or 5 years. Okay, so when we talk about Lending Club, we don't talk about a range or a continuum. We talk about two binary options, if I can use that phraseology here. So you have either 3 years or 5 years. What are the pros and cons here? The pros, the platform is accessible to most borrowers because the FICO is kind of low, 540, and they do offer joint applications. So if you want to co-borrow, you want to co-sign, no problem, they will accept you. They do charge, and that is their drawback, an origination fee. Something you have to be aware of. Now, the origination fee really depends. So they charge somewhere between 3 and 6% of the loan amount. So something you have to be aware of. And one thing I have to say also is that you got to be at least 18 years old or 19 in Alaska and Nebraska. You got to be a U.S. citizen, permanent resident, or long-term visa holder. You got to have a bank account, and you need to live where Lending Club operates. Okay. The thing here is that right now that they don't accept applications from Iowa or the U.S. territories. You got to be in the continental U.S. and not live in Iowa. And so obviously it's the same thing in terms of application. You have you first be you're first pre-qualified by entering your things like your birthday, your total annual income, your home, your address, your name, first name, last name, the loan amounts, whether you are applying with someone else, and all that kind of fundamental information. So you get pre-qualified, and if you love what they're offering you, you can go ahead and do they'll do the hard pull to get more information about you. And in terms of customer service, fantastic. Their customer service is great. They have a 1-800 number. You can call them. They're available. Their representatives are available Monday through Friday from 5 a.m. to 5 p.m. Pacific, and Saturday from 8 a.m. to 5 p.m. Pacific. So fantastic. All right, so folks, you've heard the four studies here, the 4 reviews here, and which one should you choose? Depending on your situation, it really depends. Again, I always like to say this on all our shows. At the end of the day, we're just giving you the recipe. We're giving you the info. We're giving you a solid piece of information for you to make a decision. It is up to you to know exactly where you are right now in your life and what kind of loan amounts you need, for example, what kind of credit score you have, because as you can see, all the lenders here have different credit score minimums, right? Some go all the way to 525, some go all the way to 585. It really depends where you find yourself on the credit score spectrum, and because lenders, as you know, they look at several spectra of risks and credit scores. So depending on what your spectrum actually falls on that constellation of spectra, you have to make a decision. You also have to think about whether or not you want to co-borrow. As you probably know, not all lenders in today's conversation allowed co-borrowing. So if you want to co-borrow, you got to go to a lender that specifically agrees to that. And you have to think about whether or not you're comfortable with fees, because you want to factor into the equation origination fees. Because think about it, they're taking out of your cash, the loan that you get, they're taking from anywhere from 2% to 6%. That's a lot. Think about it. That means what? It means concretely that if you get approved for $10,000, they will take, I'm just taking an average here, average of 4%, they will take $400. Okay? So you will only get $9,600. That's a lot. I mean, you might be thinking it's only $400, but think about it. If you are getting 100,000, they'll be taking $4,000. So it is a consequential. This is a substantial number. So if you're not comfortable with that, don't go on a platform where they charge an origination fee. Also think about, you want to compare and contrast the rates and loan terms before making a decision. Okay, and you also want to make sure that you are comfortable. You want to make sure that they have a 2-step process: the pre-qual, where only soft pulls happen, and a solid qualification where they will do the whole hard pull. Okay, and obviously you want to have your data ready, things like your pay stubs, your tax returns, your bank statements, and other personal information ready, so that once you choose your platform, your desired platform, you can go ahead and accelerate the application process. All right, folks, our pick in today's conversation is Best Egg. We have assigned a score of 9.5 over 10 to Best Egg, Lending Club 8.5 over 10, Payoff 8 over 10, and Prosper 8 over 10. Thank you so much for your attention, folks. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.